rich man and I have been a poor man, and I choose rich every fucking time.
Good morning, everyone. Hope everybody's doing great and everyone is enjoying their weekend. Welcome to the weekly videos. I hope you guys are enjoying these. Please don't forget to like and subscribe. Let's look into what we have coming up. We actually have a pretty interesting week, another busy week that is coming up, very important as well. So we'll look into what happened last week and what's coming up. So let's dig into it because I don't want to make these videos to be too long. All right. So it was pretty interesting last week. We saw, some gap ups and we saw gap downs. And we did have Powell come and speak last week. It was pretty interesting that he did not use any. I listened to his speech a few times, actually. He did not say any strong words. He also did not say anything to give a signal that they were changing any course. They're still going to be, raising the interest rates, but maybe not at the speed that first market thought it was going to. But market took it as a positive sign because, he wasn't, he didn't use the same words the way he used it during the Jackson Hole. So as we saw, market was waiting, and as then when he wasn't saying much, it seemed like somebody was, when someone is pressured, you can't really say something. It felt like that. But again, it is, he's contradicting his own words at some point. In some ways, I feel like it is, if the financial conditions are not tightened, how do you bring the inflation down? If they are pivoting away from that, that's not really going to help for the number that they want to bring it down to the 2%. So unless he already knows the data about CPI and he's really gambling on that, that's what's going to take care and bring the market down. And we'll see that. We'll see when the data comes out. But the sound from his meeting, it felt like he already knows something that will be bringing it down. But I don't know what it is, or I could be completely wrong. But it was interesting. It was very interesting. And then on Friday, we had the non-payroll numbers come out, and they were good. And then the unemployment rate was pretty much unchanged, and the hourly earnings have gone up. So it's up. Estimate was 3%, but it's up to 6%. So that means, employers are paying a lot more to keep these workers working. So it's up quite a bit, more than 3% what they had estimated. But the funny thing was, when the payroll numbers come out, it's like, good news is bad news is good news these days. You all saw, we pretty much gapped down, a big gap down. It was almost like $68, $69 pullback. And then we ended up pretty much recovering all by the end of the day. So very interesting price action throughout the week. This week we again have a pretty, busy week, I would say. A lot of important information is coming out. We have the ISM numbers coming out, especially this Monday, first thing, and then factory orders. Then the next is your productivity at SAAR, and then the unit labor cost, those things are coming. And then consumer credit is coming, and you have the initial jobless claims on Thursday. And then Friday, we have the producer price index final demand that's coming as well. So all of this is gonna be pretty important again for us to see what kind of data, what kind of numbers we're going to be getting from here, and then how the market reacts to it. Because for me, I think Powell is betting all his money on the CPI for the following week. That's where I feel like he's relying on that, and he knows something that is gonna be is gonna pull the market or not pull the market. I don't know. We'll see. But it felt like he already has some sort of information, and that's why he wasn't being too harsh to say that he didn't use any of the words where market got scared or anything. It was actually the other way around, where market just took it as positive and started running. So we'll see. Again, we'll see what the numbers come out, and we trade price action, right? And then we do have earnings. We have some interesting ones at Costco, especially after hours before the PMI numbers on Friday. We get Costco, Lululemon, and Chewy. I would be more focused on Costco. Want to see what they do, especially where the ticket has been. So Costco is pretty interesting to watch. This should set the tone as well, what the Fridays can look like as also. All right, so let's look into what we have. I'm actually going to start with the QQ today. And we haven't really much looked at it. This is, if we look at it in a perspective of what kind of pattern it is making, we are kind of this was a bear flag. We ended up dropping. This is kind of setting up pretty much identical to it, is what I am seeing. Maybe other people might not see this, but this is what I'm seeing. I feel like what they did was we had a break off this trend line. We broke out of it, kind of a fake out, and then we dropped pretty hard. I think this exact same setup could be happening on SPY as well. We'll look at SPY chart as well. So we'll see. This is what I have. This box is what I want to see how we do on QQ, 301 to 309 area, or you can say 303 to 309 area, because either of those levels are pretty strong resistance. And it is a supply from a smaller time frame as well. And this also hits your 200 moving average also. So definitely want to see how we do here, how we reject, because this, QQ will also translate to all of your tech tickers as well, how they're going to be doing. And then knowing what's happening with Apple, they are starting to move everything out of China right now. So that might be taken as a positive news, but that also means they're going to be spending a lot of money to now reset up in other countries, right? So something to keep in mind. Just watch Apple with it. So this is the level I want to see if we're going to have the same sort of a setup. And then if we go to SPY, we could be looking at exactly the same what happened with QQ, because right now we are above the 200 moving average. But if you do look at this pattern, actually a lot of the charts pretty much have the same candle pattern. This could be an evening doji star, but it could also be broken. So we're at crosshairs right now, right here. I'm gonna cover about this as well in a minute. But you have this trend line going up and you have a trend line coming down. So we want to see how we break out of it. I would say 414 is my number to see how we react up to that. Or if we get to 414 and then we reject from there, then definitely we're going to be making new lows. I give the second or the third week of December, we should see some sort of some ugly price action as well. But 414 is the number that I want to see how we get to it. But if we are starting to break above 420, 430, then might as well say SPY to the moon, because then this is completely against what Powell really wants to do. The other thing I noticed is, when you look to the left on your charts, any of these moves that happened starting from February, March, and then this, the July, August move that we had, and the move that we are in right now, pretty coincident. Look at the percentage of the number, how it is coming to so close to each one of them. And then we ended up taking all those big hits and coming down. So this time we are slightly probably going to be over already, depending on how we open next week. I feel like we could have a small gap down and then we consolidate, wait for these numbers and news to come out. And then by end of Friday, we could have, kind of like a double top situation and then finish the week at low. And then CPI comes, we could see a push through and it sweeps through all of the highs and then we pull back, we dump. That is another possibility of happening as well. So this is where I have SPY. And then, and for SPY, I'm actually going to start giving, I think, the calculations that I've been using. I do get, it's been pretty accurate, actually. I would say right now, I'm getting the weekly average is anywhere between 403 to 417. So that's why I'm kind of picking 414 to see, and because that also been a strong resistance, that 414 area. So, but the range could be in that zone as well. All right, so let's look at SPX as well. This broadening kind of wedge pattern is still pretty much intact. We also have again, the similar candle setup. We are above the 200 moving average. You do have your fib levels coming up as well. This was a rejection at the 72 fib level. But if we are breaking through, this is also considered, could be a very nice rejection on SPX, which is 4150, and which would line up with your SPY going to, 308, 314 area as well. All right, let's look at ES. This is what I kind of sort of draw off on the futures. What I am watching could see, rejection in the 4120, 4125 area, or have a slight pull up, and then we pull down to it. This is considered a pin bar. So, and if you know your candles, you find a pin bar and you're sitting at the 200 moving average, it could be a really good setup for a long side of it. But again, this year, the price action's been all over the place. It's pretty hard to kind of even trust what happens until the next day when you have, market happening and you're seeing the live price action is what you want to trade. You can just look for a high probability trades, right? So this is basically a high probability is what I am looking at. Also, it serves my diamond pattern as well. So we are right into it. This could also set up, have that pull up, have that run up on SPY as well. And then we see the pullback. So that's where your futures are. Let's look at the US 500, because I do like to look all of these charts. They should look very similar because they are hand in hand. And here we go, same thing on the US 500. You got the pretty similar candle sitting right here as well, and the 200 moving average is right there. Let's look at VIX. We are pretty close to hitting our demand zone as well. So if VIX pulls back into the $18-17 range, you will definitely then see that run up on SPY SPX as well. So this is 3 black crows currently forming on VIX, which is, we know, bearish pattern. So we should be able to see some more pullback too on this one. But again, we'll see where we open up. Dollar also have been pulling back. Look at it, we've actually lost the 200 moving average on the dollar as well. And it has a demand zone coming up as well. So we'll see how we react in this area. If we do lose, your next demand is somewhere in the 101, 102 area as well. So if we are going to bounce, then this would be the area that you want to watch on it as well on dollar. And then if we look at the 10-year, pretty much 10-year also has pulled back, but it is sitting at a pretty strong support area as well. And so we'll see how this reacts also. But definitely, if dollar is weakening, if VIX is pulling back, 10-year, you could see this one also pulling back as well as well. So let's look at TLT. Look at how strong these candles are, right? This is setting up beautiful. You got the 3 white shoulders. So if the 10-year, if your treasury bonds are doing good, your market's going to do good as well. You will see SPY continue to go up. And we do have SPY coming up on this one as at the 110 and 111 area, but I like to see how we're going to cross the 108 first. If the 108 rejection is there, then I would say SPY's got about 304. But if we are breaking through and heading here, then 314 on SPY is definitely on the move. TNX, this is the opposite. So this is good pullback. I would say somewhere in the 340, 3.40 area. And if it does, again, that's the opposite for SPY. SPY will continue to go up as well. So a lot of things that we have to look at before we even decide what things, where market is going or what's going to happen. It's no longer that you can look at, SPY and look at VIX and say, oh, VIX is down, SPY is going up, or VIX is up, SPY is going down. So, but right now you're going to have to look at all of these different scenarios before you jump into anything. I would say even for long term, any swings, you make a decision, always look at the bigger picture. Don't just go with the, 1 or 2 confirmations. Always look for more than 3 before you touch anything. Okay. Let's look at a couple requests. We'll go over there. Netflix was one of them. I would say this is, again, beautiful 3 white shoulder, soldiers, not shoulder, candle pattern, and it will fill the gap we have at 331 area. Definitely quite a bit of dark pool prints are happening at 321. So if 321 is broken, I would say gap fill at 331 is looking pretty nice. And it does not actually have a supply until in the above the 377, 388 area. But on the smaller time frames, we do definitely have other supply zones. But looking at here, this still looks like it has a little bit more room to the upside before it pulls back. So if we go to the weekly, I did draw this on the weekly, and I think so far it's riding the uptrend very nicely. Weekly candle also, where I like to look at the left of it. We've broken all of the lows of the weekly candles. So this is a pretty strong setup. As long as we clear 321, I think Netflix definitely has a room up to the 331. And then we can look at it next week, what kind of candles we form or what kind of money is coming in. But right now, I am seeing maybe a slight pullback, but as long as we clear 321, I think this one has another $10 to $12 left in it before it has before it starts to pull back. My favorite, the one that I'm actually waiting for, is Starbucks. It is in a supply zone. We are, and this supply is from the smaller time frame, and then on the larger time frame, we do have a supply up here. What I want to see on Starbucks is another push through, and I'm gonna be looking for a long-term puts on this one, and I am looking to see first. I'm not jumping into it right away, but I want to see if we break through here, 310 to 311 area. 110 to 111 area is where I will start my position. I won't go all in, but I will definitely start a position for my puts, probably looking out to the 2024 area time frame, sorry. And then if we still continue to pull up and we do decide to go into the the weekly and the daily supply zone into the above 312, 314, I will add more. But I think the touch of 311 or 310 is going to be my starting positions for puts. Definitely a beautiful setup, really nice cup and handle breakout for this one. And didn't really see a much negative flow yet. on Starbucks. So that's why I think it still has a little bit more room, because 310, why do I keep saying 310? 110 still calls have quite a bit of open interest on it. So that's the area I want to watch, the 110 to 111, how we react and what kind of rejection we have. If we are breaking through it, I'm not going to jump into it. I'm going to wait for the price action. Really good setups for even day trades. So all you do for your day trades is you come down to your 1 hour and you look for it. Are you above or below the 200 moving average? And if it is up the 200 moving average, you look for your strong supply demand, or you look for your strong support and resistance. And every time it bounces very nice, you could be doing a really nice day trade. So anytime it rejects at the 200, does pull back very nicely. But anytime we break above, this becomes a really good setup and gives you nice entries to do a day trade. And that goes for any ticker that you want to pull up your 1 hour chart, look at your 200 moving average. You can use one of the small moving average. You can use the 21, you can use the 50, and look for those crosses, bullish or bearish. However, I always like to look for what kind of candles we're forming. Was it a reject? Was it bounce? And then from there, that you can decide what kind of position you want to take. So on the daily, I definitely think this is a better setup out of all the tickers that I looked at. I think this one would be a very nice to for a longer term hold. And I was looking at some of their contracts as well, even with the time, and you buy the contract, I think the max was like $700, and the return could be anywhere 6,000 to 7,000 if you hold for the full move. Definitely has a room at least to pull back to the $80 again, once, the whole market does turn around as well. Facebook, Meta. So this is the daily chart on it. You do have a very, very high dot pull prints at 128 area, and that happens to be your bottom of your, top of your gap fill as well. So if we do fill this gap and it's breaking above here, above 128, this gives a clearance to Facebook to continue to move higher into the 132 and even 144 area. And that should also, kind of start to pull back the 200 moving average as well. But this definitely has a room. If I always say, wait for a confirmation. It's only a few dollars. You don't want to jump into a swing and be holding unless it's a pullback to the demand zone and it's holding. The demand zone you want to watch is in the 110, 111 area. If it holds and then pushes through, that would be a nice swing trade as well. But if we are moving, wait for to clear this area. If it is not clearing, don't jump into it. You rather want to pay a little bit more for the contract with the confirmation than be caught in a trade and it turns on you. So for this one, I would say slight more room, rejection, and then see if you can get a nice entry for it or pull back and then move higher to it. We can also, I think, weekly, very nice candle setup. I would say still need, again, 128. If we do, you have a room to touch this trend line as well. All right, another one was wanting to look at TJ Maxx. This ticker has been so strong. If you were to pull, this is making higher highs or all-time highs as well. So what I want to see for this one is I want to show you guys, let's look at the 50-day. This is your 50-day chart setup, and it is pretty strong. And then if we move down to our 20-day, you'll see how candles do start to line up as well. So now let's go down to our 10-day. You can start to see the weakness coming in, right? So let's go down to the 5-day. Actually, I forgot to show you the 15-day. 15-day you can see, and you saw the 10-day. And now let's go to the 5-day. And you have more and more doji candles starting to build up. And anytime you have that kind of setup is starting to build, that usually means the weakness is coming in when ticket has been running like that. So the level I want you to watch is 81.83. If we don't cross this, give yourself extra few cents, 82. If it does not cross $82 and it rejects this with the time, the put is going to be beautiful. I do see this one coming down to somewhere in the 66, 65 area. However, you do not want to jump into a put unless it breaks below 79, I believe 79.85. Give yourself even extra more, few more cents, say $79, break below of $79. Time with it, this would be a really nice put as well, because on the longer time frames, we are starting to see the weakness come in finally in this one. All right. Another one that I like is G scalers, you want to call it. We'll go to the monthly. I'm seeing this beautiful head and shoulder setup on it. And this is my favorite pattern as well. It is broadening one, and we'll see this one pull back as well. So what I want you to watch is this area. If we do not break above 132, or it has a little bit more room and it wants to pull up to test this shoulder, then 144, 145 rejection should bring, I would like to see this thing kind of come down to in the $80 and $90 zone as well. Or wait for it. I know you're like, we're missing $9, but it could also bounce. So wait for it to break below 120.73, because that was a very strong dark pool print. So if we lose below 120.73, that gives you a confirmation with the time on your put. You can see this one is almost a, $30 move, and that $30 move can pay you very nicely. So keep this one on the list. And last one we'll look at is Apple. Okay, nice setups on Apple, but again, with the news, we'll see. You can see you pretty much have the similar candle setup that you have on SPY and SPX as well. So I would say anytime it pushes through to 150, 154 area, keep adding. If you have long-term puts on it, I think this is gonna pay very nicely. 154, 155 rejection is, or a 200 moving average also comes in that area. Rejection of these ones has been paying off. I still like to see, I think we're gonna still see more lower lows on Apple, somewhere in the 110. I know, could call me crazy, somewhere in the 81 area as well. All right. So that is it for me today. I hope you guys, this helps. And you guys are enjoying these videos. If you have any questions or, comment below, and please do like and subscribe. I will see you guys next week. Thank you.